This is Bob Payne, Chief Investment Strategist here at Payne Capital Management, with this week's market update. This week on the Street of Dreams, market bounced back on Friday, closing out a tough week that saw the index plunge 1,100 points in a single day and complete its longest losing streak since the 1970s. Core than expected inflation helped fuel the session's rebound. November's reading of the Fed's preferred inflation metric, the PCE, increased 2.4% on a year over year basis. That's slightly less than economists expected and did help ease some of the bearish sentiment that arose earlier in the week when the Fed announced it would dial back future rate cuts due to persistent inflation. Now, even as the major averages jumped on Friday, all three booked losses for the week. The Dow lost nearly 2.3%, its third straight losing week. The S&P fell almost 2% week to date, while the Nasdaq was down about 1.8%. Now, the Fed's SEP projections, a summary of economic projections, showed much more concern about inflation than they had just 3 months ago. They now forecast 2.5% inflation versus 2.2% for 2025. So it may take a while to get to their 2% target that they've been looking for all along. This hawkish rate cut by the Fed was the cause of this week's volatility. With that said, it's entirely possible a correction is underway. Because corrections swing on sentiment, they're impossible to predict with any time and any certainty. But as I always say, the market will do what it has to do to confound the majority opinion of the day. It loves to make as many people look as foolish as possible. You see, the market is counterintuitive, which means it will often do the opposite of what most investors expect. Today, we're supposedly in the midst of a traditional Santa Claus rally. Shouldn't surprise anyone if stocks drop instead of a Santa rally. We wouldn't enjoy it, no one would. But volatility and corrections should never really be a huge surprise. They're always possible for any or no reason. Corrections are normal and they are times of opportunity, not a time to panic. Without volatility, there is no opportunity, and it's opportunities, not guarantees, that benefit long term investors, especially in a big, booming bull market.